The central bank has said pay increases for the Programme for Prosperity and Fairness are about right for the economy, given our rate of inflation and our growth in productivity. However, it has also warned that more industrial disputes could damage the economy and our reputation abroad.
While the top economic executives at the central bank said today that the bank did not have an official view about the bus strike, they said it was their personal view that the bus workers appeared to be very low paid. But they went on to say that the bank's official view is that the increases in pay of the order of 5% per year incorporated in the new national pay deal were about right for the economy in light of our inflation and productivity experiences. They warned, however, that any drift above these amounts would have serious ramifications, particularly for Irish-owned companies, and that it was essential that any drift above these amounts should be kept as close as possible to zero.
But what we would be quite concerned about is that there would be any drift above and beyond that figure. We think, in fact, that any drift would have to be kept to an absolute minimum.
The bank also went on to warn that any escalation of industrial disputes in the economy would have a very adverse effect.
If, and it's a substantial if, I mean, if industrial relations escalate, I think we could have significant problems domestically which would undermine growth, and I think perhaps more importantly we could have problems internationally in terms of our reputation abroad, and I think in that latter respect I think we're playing for very big stakes. I think the reputation of Ireland abroad is very important.
Although the central bank says it would be optimal to see our economic growth rate more or less halved, it offers no policy prescription for how that slowdown could be engineered. In addition, it says it is not worried about a crash in the property market and that mortgage lenders have not put themselves in danger by lending too much money. However, it points out that the biggest problem in the property market is that so many people have been locked out of home ownership and that this issue has now reached unprecedented proportions. George Lee, RTE News at the Central Bank.
The European Commission and US President Bill Clinton have welcomed the OPEC decision to end its year-long restriction on oil exports by increasing supplies to the world market. The restriction was one of the factors contributing to higher inflation in recent months. It's not yet clear how or even if consumers here will benefit.
The discussions went on into the night. Finally, 9 out of the 11 OPEC members bowed to international pressure and agreed to increase oil production by over 6%, or 1.45 million barrels a day. The Secretary-General said that the decision had been made for economic and not for political reasons.
Our decisions are also governed by the likely effect we believe these decisions will have in the market, and we have to take into consideration the interest of the whole of the international economy of which we are a part.
Iran initially declined to follow OPEC's lead. However, today its oil minister said it will increase production to preserve its own interests, although it didn't specify how large this increase would be. And the 11th OPEC member, Iraq, has been outside the quota system since sanctions were imposed after the Gulf War. OPEC's decision was warmly welcomed by the United States, where the rising price of fuel is an election issue. Washington had put pressure on the cartel to increase its supply. But experts here aren't convinced that lower petrol prices are on the way.
I think that the overnight news stopped petrol prices going up rather than actually brought them down. The oil price fall today was just $1 per barrel, a relatively modest amount. The big fall happened in the last couple of weeks, but that was immediately following a very large rise. That very large rise was probably never passed on to consumers, therefore the very large fall probably won't be passed on either.
It seems that good news for the Irish motorist is far from guaranteed. Sinead Crowley, RTE News.